My name is Volker Kruger, and I will be discussing a couple of legal principles regarding VAT, payable in respect of the sale of removable property. Now, I should emphasize a disclaimer. Whatever we do or share with you during a talk like this is obviously general advice. You shouldn't take any final decisions on any specific transaction that you are working with without getting proper tax advice from an expert. So please consult us or anybody else who regularly works with these kind of VAT and other questions that are relevant for the sale of fixed property. Now, when dealing with sale of land, the first question in terms of whether there's a VAT or transfer duty payable is always to start with a question about the VAT status of the seller. So the first question should always be, is the seller registered for VAT or not? Because if he isn't, then it isn't a VAT transaction. Then there would be transfer duty potentially payable, except if one of the exemptions obviously apply. At the moment, for example, any purchase price up to R1 million is exempted from transfer duty. However, if the seller is indeed registered for VAT, then it's a VAT transaction. And then you need to investigate further what the consequences of that would be. If the seller, for example, is registered for VAT and the purchaser is not registered for VAT, then there would be potentially VAT payable in respect of that transaction if the fixed property is also part of the VAT enterprise of the seller. In such a case, it's very important to make sure that your agreement caters for VAT, because if you don't specifically refer to VAT, then it's deemed in terms of our income tax, in terms of our VAT Act, that VAT is included in the purchase price. And there's actually a court case that dealt with such a scenario. It's the Gerber matter that was reported in 2016, where the purchase price was 1.8 million rand, and no mention was made in the contract of sale to VAT. And the transaction was then proceeded with on the basis that there is transfer duty payable, but later they discovered that it would actually have to be a VAT transaction because the seller was registered for VAT, and consequently the seller then asked the purchaser to pay the VAT amount on the 1.8 million rand. The purchaser refused to do so, arguing that the VAT amount is included in the purchase price, as the contract of sale doesn't refer to any VAT amount being added. The matter ended up in court, and interestingly enough, the court decided that the seller can indeed not claim the VAT amount. So the purchaser won the court case. The VAT was accepted to be included in the purchase price in terms of the VAT Act, and the seller consequently got an amount of about 221,000 rand less, which was a 14% VAT at that stage that he had to pay from the proceeds of the sale. So from the seller's point of view, it's certainly very important, and also from an estate agent's point of view, advising the seller to properly cater for the VAT being payable if that is indeed what the parties intend. So that's where the seller is registered for VAT and the purchaser isn't. If the purchaser is also registered for VAT, then the purchaser could potentially claim back the VAT amount from the receiver with his VAT returns. So if he has to, for example, pay the VAT at the moment of 15% of the purchase price of, let's say, 1 million rand, 150,000 rand, then with his next VAT return, he should be able to claim back the 150,000 rand. So it's merely a problem from a cash flow point of view that the purchaser has to plan for. Then another scenario is where the seller and the purchaser are both registered for VAT, and there's a going concern that the purchaser is taking over, that is being run by the seller on the land that is being sold. For example, there might be a farm that the seller has on the property, a farming enterprise, or it might be a building that is being rented out. In other words, there's a renting business that the seller has on the property that is being sold together with the land as such, or the contracts of lease would then obviously also be sold to the purchaser, in other words, seeded together with the sale and transfer of the property. And in such a case, there would also be a going concern that the purchaser is taking over. And then you might be able to get a zero-rated transaction. That means that no VAT would have to be paid to the receiver, even though it is a VAT transaction. So VAT is basically charged at 0%, which means that it's actually the ideal scenario for the purchaser, because you wouldn't either have to pay any transfer duty because it is a VAT transaction, but no VAT would have to be paid because the VAT would be zero-rated. So that's what we would typically try to achieve. However, be warned that that is only possible if, once again, both parties are registered for VAT, and if there's indeed a bona fide VAT enterprise, a bona fide income earning activity that is being conducted on the property. And the receiver these days, in my experience, is very strict with that. So you must make sure that there is indeed such an activity on the property before you will get the zero-rated transaction. Then in the agreement, it's also very important to cater for the possibility that the receiver might not accept that there is a going concern. In other words, not be happy with the zero-rated transaction. In such a case, that would indeed have to be paid to the receiver. And then it's very important for the agreement to cater for the seller's right to, in such a case, recover the VAT amount from the purchaser. So make sure that you draft that agreement properly. And you are more than welcome to contact us. Once again, my name is Volker Kruger from Velden-Duffey Attorney. So you are welcome to ask us to help you draft such a clause which caters for the going concern, caters for the zero-rated transaction, but also caters for the purchaser's obligation to pay the VAT should the receiver indeed claim a payment thereof. What I should maybe also mention is that if it is a VAT, if it's rather a transfer duty transaction, with other words, the seller is not registered for VAT and transfer duty is paid by the purchaser, then there are certain cases where the purchaser could potentially claim back an amount equal to 15% current rate of VAT as deemed VAT input in respect of the transaction. So please make sure that if you buy such land and you use it for your VAT enterprise, that you also consult your attorney or your auditor to find out whether you could potentially claim back a deemed VAT input in respect of the transaction where you had to pay transfer duty. The final comment, maybe a question that I also get quite regularly from estate agents, is whether the VAT amount is payable on the commission that is paid to the estate agent as well. So let's say there's a purchase price of R1 million. Let's say the commission is 75,000 Rand. And let's say it's a VAT transaction where the contract stipulates that the purchaser must pay VAT on the purchase price to the seller. Then that VAT amount, the 15%, would be calculated on the 1,075,000 Rand. In other words, the commission included purchase price, not just on the 1 million Rand as such.